Good morning, Squadron. Welcome to the On Time, On Target, a morning of brief. I'm Steve Ankerstar, your host, and we're going to invest with fighter pilot precision like we do every day. And today, specifically, we're going to talk about the investing theme of investing in retail during the Christmas season. So you can sometimes it's called seasonal investing. You've probably heard that term before, but in particular with this year we have the COVID-19, the second wave's coming through. Round Rock Volleyball just got canceled for the year, so no playoffs for us. A lot of things are a little bit different this year. And how are we affected, as at least here in the U.S., as we can't travel as much as we're used to? So I think that retail therapy, if you've heard that term, we're going to be buying a lot more stuff, from largely sitting at home buying it during the season. So that's what we're going to talk about today, how we can invest on that and capitalize on that investment thesis. If you're catching us on replay, go ahead and subscribe so you get this notification of this presentation every day right to your phone there. And if you want to join us in the morning, we got a crew of us that get together and bounce investment ideas off each other. What you don't see is a chat window and a Q&A window where people can coordinate with me, not just me talking. With that, let's go ahead and get started. All right, welcome everyone. Here is our morning brief agenda. All right, make sure you have your call sign put in there. Looks good for everybody. And also make sure you have your chat window set up with panelists and attendees. You saw already in the chat that I've put in the longs and shorts of the day. There are a couple that meet our particular pattern for day trading, so you can kind of get ahead of the game there if you want to check those out. I'm still battling that craziness behind my head that has not been there since here, so it's kind of weird in the video there. Sorry about that. I will try to come up with maybe something else that doesn't have that. Okay, standard disclaimer applies. This is a financial education presentation, so you have to do your own due diligence before you act on anything you hear in this presentation. All right, our mission objective is to grow our money, protect our money, and live off our money. Today we're looking at growing our money through retail investing through entering the Christmas season. So like I said in the intro, you do normally get a bump this time of year in your retail names because they get a lot more flow, or a lot more generally foot traffic, right? Well, now it's going to be online traffic. Even the Black Friday, which really is supposedly not happening, well, it is happening. It's online, and a lot of retailers are doing like Black Friday week. It's already started, if that sort of thing. So we shall see. But these things tend not to, you don't really know what you have on your hands until the quarter earnings are released, which is in January January or even mid-February. But Q1 of 2021 is when you're going to get the report on it. So obviously, like any other investment, you have to, investors need to anticipate the anticipations of others. So if you want to get out in front of this thing and make the big money on it, then you need to consider it now, if you will. And we're big into Amazon. We're going to talk about some other options for us today. Okay, questions today. It's not too early to start thinking about taxes. So some people ask me, it's like, how do I know what I'm going to owe in taxes for the year? Well, you look up realized gains in your taxable account. So I'll talk to you about how you do that. I mean, that's glib for me just to say that, but I will talk about kind of how you do it with your custodian and then how to look at your unrealized gains. And then, what I do starting, really, it's more of a December thing, not necessarily November, is I'll print out everybody's unrealized gains and losses for all the accounts. And I will sit there and I will look for things that I can sell off that are losers. So again, you try to sell the losers, let the winners run. That's how you get these multi-year oversized gains that we've been fortunate to have. So you don't tolerate losers very long, and you get the tax break out of selling the losers. So that's what you can expect me to do. If you're outsized in a position, it's like, say you were in on DraftKings and you've got the 400% run. Well, if you swung a pretty big bat there, i.e. you bought 25K of the stuff, it's over $100,000. So you have to be a little careful on how much of that you sell, because all of that is going to be taxable, right? If it's in a taxable account. So that's really the power. A lot of people are like, well, I don't get much out of the IRAs, and I make too much money to fund all that stuff. Well, it's more of a double whammy long term, because now, since that money is not in a protected status from taxes, now I'm not buying or not selling things that I should be selling because of tax purposes. So you can find yourself in a interesting situation there. Our flow for today, we're going to do a long, short, open, short, long. We're going to do a market review. We're going to do a headline review. And we're going to talk about those 6 long-term investments that you see down there, all of which are retail, a little bit of different angles on each of those. And of course, the last one's an index fund called iBuy. From there, we will go into short-term execution. We got some day trades in there, 2 longs and 1 short. Names you've heard of today for the most part, bigger names that meet our criteria. We'll do that. We'll execute the market open. We'll transition to our Q&A, and then I'll get to my question of the day. Don't forget to add questions in the Q&A and or the chat for us to talk about. If there's any contingencies, you have any issues, I haven't heard about the sound being a problem, so hopefully we fixed that from yesterday. And it appears everything's full go for the technological suite. So, but if you have any issues, reach out to me at steve@ototnow.com. All right, let's go ahead and take a look at where we've been in the past year. Sharing that out to you now. All right, here's our S&P 500 chart for our newer folks in the room. Again, every day we always take a look about where we've been to keep things in perspective. So we have hit new highs here in the Dow and the S&P 500 a couple days ago. Yesterday was slightly in the red, but really bouncing off of this area, which is clear of the area we had at the end of August, early September, before, mild sell off into the election, not nearly as bad as I thought. And of course, if you took, I was talking with somebody yesterday, if you took January 1st and where we are today and drew a straight line, the chart would look like a normal investing year. Now, you and I know that 2020 has not been normal anything, but it would be a normal investing year. If you don't see, I fell asleep on January 1st and I woke up here, be like, oh, nothing going on in 2020, evidently. Oh, well, okay, a few things are going on, but that would look normal. We're going to get out of this year with the overall market having normal gains, and then again, depending on how active you were or we were, if I'm working your money for you during this point in time, buying Amazon at 1,500, that's where you get your outsized gains. So people get freaked out over things like this. People make me go to cash in their accounts. That's generally a mistake. Especially once it starts at the free fall, it's now you need to be a buyer. But anyhow, focusing in on, not that I want that to happen every year. You know what? If it does, that volatility creates opportunity for us to make a lot of money. Okay, let's go ahead and take a look at the 5-day here. Anything but normal, as far as, it's kind of all over the map, but really we are in an uptrend. People are positive. Folks are saying people are a little too positive in this market. I tend to agree. I'm not taking things and just willy-nilly jamming it into the market. Some of the accounts that were in cash, I turned around and went long the day after the election. So for the most part, we're positioned where we need to be as far as, kind of some up momentum going into today. So it looks like the futures are in the green, and we'll take a look. As far as our day trading stuff, we'll set up with the long first. SPR is Spirit Aerosystems. We're looking long off an earnings report. Boeing has been on an absolute tear. If you're not following Boeing every day, then yeah, you should. because it's been on tear. And then Lowe's, we'll talk about why Lowe's and the work from home stocks have been kind of hit, but we'll get back to that in a minute. All right, let's take a look at where the market is right now for the futures. Looks like the NASDAQ flipped red a little bit here. So let me take a look at refreshing things, moving some stuff around. Okay, so yeah, NASDAQ flipped a red. Let's check out Europe, green across the board. That's good. Japan down a little bit. Everything else is green out in Asia. Here are our numbers from yesterday. Really, yesterday was kind of a nothing. Kind of started down and just really stayed down. So not too much of interest there. Bond markets, not a big move either way. Oil popped a little bit. And gold and silver have been selling off. A lot of talk about Bitcoin. I don't really talk about Bitcoin here, but I might try to see if there's a Bitcoin. Let me see what this means, and we may talk about it on a daily basis now. And again, I have no positions in Bitcoin, but I know it's coming, and I'm probably late to the game. So more to follow when I kind of get time resetting everything from the election, which I'm not quite done with. All right, back to the headline review. Sure, yeah, Pfizer came out and, they had the 90% effective vaccine. And then, of course, Moderna comes out a couple of days ago with a 94% effective vaccine. And now Pfizer says, well, actually, ours is 95. It's like, is Trump rubbing off on everybody in the world now where Moderna is going to come out today and say that it's 96%? What's going on, fellas? This seems kind of silly. But hey, 95%, whatever. We need this thing to die off because the numbers are not looking good. Yeah, I think stimulus has to happen. Otherwise, people are going to start running their politicians out with pitchforks. So that should happen. Again, not necessarily for somebody like me, but there are plenty of places that are just going to go under. We had a local Flicks Brew House, went under. There are certain things that just aren't that are folks that are giving up. And businesses are closing, that's not healthy. If they go to a man kind of thing or just delivery, a lot of businesses will pivot, but at some point they just can't continue, or they've been operating a loss and just can't continue to do so. Boeing 737 MAX to fly again. CEO was on CNBC this morning saying, hey, my family will fly on it. I do not worry about what airplane I'm on at the airport. I really do not, and I'm a pilot, or was at least for a number of years. No, it's fine. We shall see. All right. Some futures are up. Boeing popped 6%. Again, that's one of our day trades. It's been on a tear. I think it continued to realize how crazy it was. I mean, Boeing's at 224 right now, and literally we bought some below 100 at March 23rd timeframe. Kind of crazy. People gave up on Boeing. It's like, what? It's the only defense, in my opinion, the best of breed, only defense stock where you get two major exposures. Defense Department with all the contracts, and then you have airplanes. And the world needs airplanes. I know people aren't going to travel as much, but all right, 18,000 for Bitcoin. That's why it's got to come back into the cross check here. It has hit 20,000 before, so this is not new territory, but certainly a lot of money flowing into it, and people understand it a lot more. And I need to get on board with talking about it, at least if I don't put money behind it. Okay. Yeah, S&P could gain 12% over the next year. That's a nothing burger. I mean, 10 to 12% is your average year. So if somebody's going to put you on TV and make you say something, that's about the safest number you can say is anywhere from 10 to 12%. All right. Okay, let's talk about our investing theme. Got a little long-winded there. I'm not going to cover the FinViz stuff for Target, but sharing out, we have Target, Walmart, Amazon, Kohl's, Sony, and iBuy that I will talk about here real quick, in the fact that Target is they had earnings. They just beat earnings today. So that's why they're kind of in the cross check. So you have Target. It's really not too late to get on Target, because Target's just a monster. They have an online presence. It's kind of the one up from Walmart, right? If you haven't showered, you go to Walmart. If you look nice, then you go to Target to do your shopping. Walmart's obviously popping going into our Christmas, Black Friday time frame. So crushing earnings there as well. And I think that's going to continue. Again, retail therapy. We are going to basically spend our way out of feeling better since we can't travel. Amazon's been a beast, but it took a breather. I talked about getting in at 1,500. It raged up to almost 3,500. It's taking a breather now. It's still a long-term buy here. If you can afford a share, pick one up. If you can afford 10 shares, 20 shares, do it. Hold it. Stop thinking about it. Kohl's been left for dead. Again, that's a discount retailer until just lately. It's starting to come back a little bit. So Kohl's the name that I've liked for a long term. They do have a relationship with Amazon where you can take stuff you buy on Amazon that doesn't fit back to Kohl's. It's brilliant. The stock has not been rewarded for that. So I do think there's going to be upside there. They did eventually cut their dividends. So you'll see the dividend payments stopped, which, that doesn't help. Sony, if you want to go into retail therapy and focus on something, the PlayStation 5, which I don't have my hot little hands on for my kids, which I need to, I can't find one. So, that the pre-orders and you can find pre-orders. So there's lots of good signs going into the stock. Obviously, PlayStation 5 isn't the only thing Sony has going for it, but it certainly is going to been helping the stock, and I think that'll continue. And lastly, if you don't want to make any determination, you just want to buy into retail, iBuy is the way to go. You're not wrong to buy it here. Crazy, right? It's already run up from 33. It just took a triple right here already this year. You're not wrong. People are going to still spend money, especially if we can't travel. All right, 2 minutes to the market open. Let's go ahead and set up for our day trades. Again, I've got 2 longs for you and a short. So you should see your screen. ThinkPipe's coming up to you now. On the left, you've got the SPY on the 1 minute chart. You've got Spirit Aerosystems that crushed earnings they were up at 6%. We'll see where they open. Been selling off a little bit. Largely, this is just mirroring the market, so I'm not too worried about it for Spirit and Boeing. And then finally off to the right, you have Lowe's, excuse me, which is dropping. So the thesis there is, or the earnings, it is an earnings release type of thing, but all the work from home stocks are starting to get hit because of the vaccine news. So I don't put a whole lot into the vaccine news, but it is getting hit and looks like the market's going red here. So I think I'll favor going Lowe's short first. So again, looking for about 35 cents on a Spirit. Boeing, you're going to need probably a $2 stop, and Lowe's looking at $1.50 or so. All right, I need to get my ticker set up here for a second. So stand by, and then we will do the open. All right, welcome to the On Time and Target Play of the Day. You have 4 screens in front of you. You have the SPY on the left-hand side. There was the opening bell. We have Spirit long. Spirit Aerosystems here is in the first pane. And then we have Boeing here. We'll focus in on, again, these 2 are longs, even though you're seeing those big red stripes. And then Lowe's is a short. All right, so Lowe's is in that 6 to 9% falling down there, but it's moving up. Everything's moving opposite from what we want. Spirit, that's busted already. It's down to 2.8%. So we're gonna let that go and look at a different long that I've written down. La-Z-Boy beat earnings. They didn't have the volume earlier, so about 50,000 in volume right here. So you can see 7%. So that's right in our wheelhouse for La-Z-Boy going long. We'll look at that a little bit. Okay, Boeing selling off down below that 5% thing. So we shall see how that works out. Lowe's, we can take Lowe's short here. It popped up. It's going to be a $1.50 stop. I don't know. Not super confident that Lowe's continues to sell off. So I'm going to take a look at something else. NCLH is Norwegian Cruise Lines. They had a secondary offering of stock. I thought it was down at 15. It's up at 20 now, though. So minus 6% here. Cruise lines are canceling things. So we're going to keep a look on this for its short. Boeing's starting to move back up. Lazy boy. Just not a lot of volume in it. Overall, market's hanging out about even. Let's look at some other names. We have CLLS. I do not know what that is. I like Lazy Boy, but we'll just have to continue to watch it here. And I do kind of like this Boeing long. All right, so we'll watch it. Leave those two up. CLLS, which is Selectus ADR. So it's a foreign stock. No volume. It was up 5% pre-market. Nothing going on there of note. So let's go back to NCLH. All right, I'm going to pull the Lazy Boy story up on another screen real quick to check that, see what we have for, I have written down earnings. It was up 6% pre-market. That is it for an explanation. Really not much to trade off there, so I'm not going to take that one. A few other names going up. VREX, I think that's a pharmaceutical. Varix Imaging, up 8%, hardly any volume. Don't like that entry. Look for some more stuff. HMHC, again, this would be long. See what that was again. I missed the the ticker there. Houghton Mifflin, I do not know what they do. Not going to hop in on that, even though I kind of like the way that chart's set up. It's only a 5-cent move. Boeing's falling out of that 5% to 10% window, so can't really touch that. Let's see what CCL's doing. CCL's Carnival Cruise Line. It's generally in some state of sell-off at most times. Ooh, I do like this. It's not in our window, but I do kind of like the way it's set up. So if you're dying, I'm probably, we're 5 minutes in. I don't have a trade yet, so I'm probably not going to trade. If you're dying here, take CCL short once it hits below 1763. So you can take it here. I'm not taking this trade. I'm drawing it up for you though. 1763, so 15-cent stop would be up here, 1778. And then of course, 1750, 1748 would be your first R. Again, you would be taking this short. So this would be your arrow. Again, I'm not in this trade, but I'm calling it for you for those that want to trade today. World's worst arrow there. You'd be taking it short. So there you have it. And then your second would be, this would be your 2R point, 1733. And then 1718 would be your final R that you'd be holding out for your parameters. So anyhow, there's your trade. If you're dying to trade, it looks like it's about to hit the 1R point. Cruise lines are kind of one of those themes that they tend to sell off. And the Carnival was in the headlines for basically canceling all of their cruises through January, I think. So anyhow, a lot of room to the downside. I did not take this trade personally, but it's here for you if you want it. If you take it here, you can still do it. You'd want to close the stop up significantly. So you're out of the trade by 1720 or so. All right, Norwegian finally fell like a rock. So again, you could have caught it up here if it comes in here, kind of like we did with Carnival. Once it drops down to about 2070, you can take it could have taken it to the downside. We didn't catch it, so I'm not all that worried about it. All right, let's see what some other names are doing out there that we follow. Luckin bouncing off of $5, getting pretty close out there. See what's going on in Apple World, down a little bit. Amazon up just fractionally, 0.04%. Then Palantir's been on fire, up at above 8, opened above 18. I could see that Palantir selling off just from profit taking. I mean, this really has been an eye-watering chart to look at. 9 days ago down at 1050, almost doubled in that time frame. 75% gain sort of thing. Okay, let's take a look at some other names around the world. Clickstream's up, Boeing's up, we've talked about. LCA, again, that's a SPAC for Golden Nugget Online Gaming. Kohl's, we talked about, up 3% this morning. There's Delta Airlines. Target, we talked about this morning. Again, when I find my daily briefings, the topics, I'm really surfing whatever's in the headlines. And again, it was Target earnings that kind of kicked things off this morning. There's been a nice recovery in Raytheon. That's a defense stock that I love. DraftKings is up. Remember, just in Vegas for the weekend. So a lot of gambling. The table games, they had, plexiglass shields up in between the players and the dealer. So it's not really the social event that it normally is, as far as being at a table game or at a poker table. So you lose a lot of that. So I think you'll lose a lot of the attraction. So we're people who are inclined to put their money into play, into gambling, which, I don't like. I like investing. I'm not trying to get rich quick with some, 7-team NFL parlay, but I know a lot of people do, and we want to capitalize on that. DraftKings is the way to do that. And the sports books were absolutely slammed during college football Saturday and NFL Sunday. And largely, with social distancing, they make everybody spread out. So of course it's dumping out into the hallway like it's the Super Bowl. But a lot of people going up to the front desk and placing sports bets, like retail therapy. I think gambling action can be a way to stave off the boredom of sitting at your home. Again, I don't recommend it, but a lot of people do it, and we'll capture that thesis. All right, Shopify is another name that, again, does website stuff for people to buy things online. All right, let's take a look at what's in the red today. All right, first one's a call, not worried about that. Lowe's is in the red. So again, why would the Lowe's and Home Depot be selling off? Well, they've more than doubled since the March 23rd low. So they've moved up quite a bit, so quickly. So there's a reversion of the mean issue. If something goes up, over 100% in a 7-month period or 8-month period, if it sells off, it may just be selling off because people are taking profits. So not too much worried about those. But if people do return to where they're not, where they're, traveling normalized after the vaccine, whenever that becomes a thing, maybe next summer, we finally can get out and about again. So, they're kind of selling off with that thesis. If you own Home Depot or Lowe's, and I like Home Depot better, you just hold those stocks. You don't have to worry about it. If they get hit significantly, you can turn around and just buy some more. It'll be a good buying opportunity for you. Okay, Activision's another name you can buy out in the video game space. There's our Palantir, slightly in the red there, bouncing around. KWeb, Asian stocks, again, I'm hot on those right now. There's they tend to move, but if you have any Asian names you want me to take a look at, pop them in the chat. IQ, the Chinese Netflix, just got hit pretty hard, so expect me to do some buying there. Okay, that's kind of it. Let's check back on the trade again. I didn't take it, but I did call it. The trade's in the green, so we took in Carnival Cruise Lines a short. So we'll see how that ends. All right, let's go ahead and switch back over to, before I do that, let's get rid of my trading account. You guys don't need to see that. Okay, back over to Google Chrome. And again, this is Investopedia for our new folks in the room. If you want to look something up, anything financial or investing related, go to Investopedia. That's really your Wikipedia for all things finance. And that'll give you, a pretty good idea of where to start. Like Wikipedia, it's kind of written at the 8th grade level. So not to offend 8th graders out there, but it's easy to read and understand. A lot of times there's videos associated with it. So realized gains by definition are when you buy a stock and then sell a stock, and it also goes for shorting a stock and then buying it back, it goes in reverse as well. But whenever you make a transaction related to a stock, you're going to have either a realized gain or loss, or if it happens to be at the exact same fraction of a cent, then you would have nothing. But that's rare, right? So if you buy a Palantir, you bought one share at 10 at the direct listing, and you sell it at today at 17, we'll call it. So you'll have $7 of a realized gain. Nobody cares during the year. Excuse me, the IRS doesn't care during the year, but excuse me, during it, once you go to file your taxes, you're going to, around late January, early February, you're going to get what's called a 1099-B, which is your 1099-brokerage form, which on the brokerage form, it has interest, dividends, section 199 gains, foreign tax paid, investments. If you're with me and you're paying me an investment fee, it's on there as well. So you can turn around and deduct that. And it has your gains and losses. It has short-term gains and losses, and it has long-term gains and losses. We don't need to go into that today. Also, it has unknowns on there. If you have shares of Prudential that maybe you were gifted a decade ago, and you go in and sell them, and it doesn't have a cost basis that is tracking with it, then it will mark it as unknown, and it will show up on your taxes. If you just don't ever look at it and you don't go in there and put the cost basis in, you'll pay taxes on the entire amount. So really worth either knowing what you're doing if you do your taxes yourself. I still do my own. Largely, that's not because I enjoy it. No, sir, no, ma'am, I do not. But I do my own to be able to stay on top of things, and also I can advise folks. So it's kind of I need to do it for more keeping my competence high on tax, all things tax related. So if you want to know what you owe in taxes for 2020, you can go into your brokerage account right now, and you will go under. There's going to be a holdings or positions, and there will be a history tab, which you can look and see at the buys and sells that either you made or I made for you. And then there will be a cost basis tab. You click on the cost basis. Now, here's where the functionality I don't necessarily care for. They always, with the cost basis, have it tabbed to where when you click on that, it shows you what you currently own. It shows you unrealized gains, which means it shows you all your positions, your total number of shares, and the average price across those shares, if it's up or down, and then if you sold today, what the gain or loss would be. And then it has another column where it breaks out the short-term gain. And then, of course, if you hold it over 365 days, then you get the long-term gains, which helps you save on taxes. If it's losses, it largely doesn't matter if it's short-term or long-term. Now, after you see that, you can click on, so that's the tax implications if you make a move on anything you still own. But if you want to look at your history, you need to click on realized gains, which will be the next tab over. And when you click on that, you have to look at the time frame. Sometimes it gives you the past week, whatever the default is. The default should be the annual, right? Because that's what people care about for their taxes. Click on 2020, and it can show you every buy and sell from January 1st through the current date. And say that you're up 8,000 for a year of stuff you've already sold, and you don't want to pay 8,000 in taxes. So then you would look through some stuff that you have and try to find things to sell. That's called tax loss harvesting. That's why markets tend to kind of dip in December, is because there's a lot of selling going on for tax purposes. So those are, sometimes markets don't make sense. Okay. All the time, markets don't make sense, but that's one of the forces you have going in December. And then, of course, in January, you have a lot of buying because all the money flowing into the IRAs, the contributions, 401ks, that sort of thing. But as far as your realized gains, that can help you plan for your taxes. So if you know how much you're going to make, generally you've made most of it for the year, you can project out your income through the end of the year. You can look at your realized gains, and then you can determine, do I have room here to, in the current tax bracket, sell some stuff, take some gains without going into the next tax bracket? So again, that's your tax planning. If you wait till January 1st, guess what? You can't go back in time and fix things. So it's really something that once you get a taxable account, I would say above 100,000, it's something you have to do every year. Below that, you're probably not going to get burned too bad on taxes, even if you don't know what you're doing. right? So anyhow, that's all I have for you on the realized gains. All right, you guys are quiet today. No questions, not much in the chat. Let's look back at our trade. Nope, the trade flipped against us. So busted out the top side there on Carnival. All right, that's what I have for you. Tomorrow is Thursday, and we will see what's going on in the world tomorrow and talk about it. We'll see you guys in the morning. Bye.